thank you to the good people of Shares Magazine and AJ Bell for putting on this evening. I appreciate the opportunity to get in front of potential investors and speak about Oroco, a company of which I am a co-founder. Oroco was started in 2006. We went public in 2008 on the TSX exchange. Between 2008 and 2013, we developed the Cerro Prieto gold and silver mine in the northern state of Sonora in Mexico. In 2013, we sold that. We've been collecting revenue from that in the form of royalties ever since. And from that time until 2020, we focused on a larger project, a significantly larger project, the Santo Tomas project, also in Mexico on the west coast, straddling the borders of two states. We have 216 million shares outstanding. Shares are trading at approximately 70 cents Canadian today. The market cap of the company is therefore about 150 million Canadian dollars. I won't go through in too much detail the management list, but I will outline Richard Locke, our current CEO and director. In 2020, when we had resolved the land title dispute at the heart of the assembly of Santo Tomas, we, being corporate finance and legal people, we needed expertise in running this company and taking this project forward. Richard Locke, at that point, was in the process of seeing the company he was working for be sold for approximately 1.8 billion Canadian dollars. Just north of us, it's another large base metal deposit that was bought by South 32 of Australia. So we had been through the process of drilling, delineating a resource, acquiring surface rights, acquiring water rights, engineering, etc., all of the pieces necessary to take a project to a turnkey state. We divested that project. Richard Locke was involved in the very same process, but with a project of the same scale as we expect Santo Tomas to be. So Richard is English. He lives in Montana now. He became our CEO, and since joining the firm, we've advanced the project with a 50,000-meter drill program. We've announced a mineral resource estimate in May of this year. We've raised approximately 60 million Canadian dollars. We've started speaking to the types of companies that we would expect would be an acquirer, ultimately, of Oroco. The question was asked of Rainbow if they would expect, or what price they would expect to accept in a takeover. That's a reality for companies like Rainbow and like ourselves. Building these large metal resources at a time when the world is transitioning from fossil fuels to renewable energy and electrification is going to require massive amounts of metals. Rare earth metals in some cases, in all cases, across all renewable energy technologies, copper is the major component. So Richard had been through that process. We'd been through that process, but on a smaller scale in 2013 when we sold Cerro Prieto. And so Richard's joining the company signaled the start of a phase of developing a resource, engineering, permitting, et cetera, that would ultimately lead to a divestiture. In May of this year, we announced a mineral resource estimate, approximately 8.6 billion pounds of copper. That's 95% copper. The following 5% is copper equivalent in gold, silver, and molybdenum, which are also present in the resource. We can quote this resource in copper equivalent, 8.56 billion pounds. We can quote it in gold equivalent if we wanted to. It's the equivalent of about 17 million ounces of gold. One thing that the Canadian regulations, mineral reporting regulations, don't allow me to do is to quote it in dollars. So multiply for yourself 8.56 billion by the current price of copper, which is just below $4, and you see this is a multi-billion-dollar resource, so a very large asset. We announced that asset after phase 1 of drilling. It was not meant to be exhaustive of the minerals contained at Santo Tomas. It was just meant to get us to a certain threshold, a threshold at which we could study production at Santo Tomas. A significant potential to expand remains at Santo Tomas, and we will commence a second phase of drilling shortly. The other thing we'll do is we'll announce, coming up in the next several weeks, I think, preliminary economic assessment. Rainbow referred to it as a PEA. It is a preliminary economic assessment which provides capital expenditures required to put that deposit into production, operating expenditures, and it gives a picture of the deposit. It gives you a net present value, that is the present value of future cash flows net of the capex, and that's expected in the coming weeks for us. The project is extremely well situated. We're 160 kilometers to a deep water port. We're within a region called La Entrada al Pacifico. It's a multimodal trade and transport corridor developed by Mexico and the United States jointly. Exactly 4 big industrial projects like this. So we've got rail, we've got high pressure gas pipeline coming from Texas, we've got the highway system, we've got a hydroelectric dam, all within 10, 15, 20 kilometers of the project. And all the transport routes lead in parallel to the deepwater port 160 kilometers away. So there will almost certainly be CapEx and OpEx advantages that accrue to us versus other large copper deposits. Mineral deposits exist where they were formed. They don't exist where it's convenient for the type of infrastructure that supports them. Santo Tomas happens to exist within an infrastructure corridor. That's extremely valuable when you compare that location to that of other large copper deposits. 4,000, 5,000 meters up in the Andes, in northwest Canada, where there are many hundreds of kilometers away from ports or any transportation or any infrastructure of any nature. So we have, I would say, probably one of the best located large copper deposits with respect to access to infrastructure. The savings would be in the range of hundreds of millions of dollars. PA, I mentioned, is underway. It should be, well, we see there by the end of Q3. So by the end of this month is when we've announced that we'll publish that. We've raised about $60 million since January of 2020, which I think is a measure of the support that the market has given to this company. And I think a lot of this mining stuff isn't necessarily very exciting. What does get exciting, and Rainbow referred to this, what does get exciting about this business is when you have converging trends that may lead to higher metal prices and increase the value of the assets. In many cases, increase the value quite dramatically. Copper's central role in economic activity is now being bolstered by its central role in renewable energy and the electrification of everything. Copper is the one metal common across all renewable technologies, both in the generation of that electricity, in the transmission of that electricity, and in the end use. It's the copper wire in a Tesla that gives it kinetic energy. It's the copper wire that connects the Tesla charging station to the generation of electricity. And it's the large amount of copper, tons of copper, in every single wind turbine. So we are at a time when there's converging trends that make this a potentially exciting story. We have dramatically increased uses of copper at a time of a dramatic decline in the discovery of new copper resources and an expectation of demand that exceeds supply, estimated by the end of this decade to be 24-25% of total copper demand. In times previously when we saw, for instance, copper production lag copper use in China during China's rise over the last couple of decades, copper prices went in 2001 from 65, 75 cents a pound up to 5 or 6 times that. Copper production caught up, but we're at a little bit of a different phase now as we expect greater increases in annual copper use than even during the China-led metal supercycle. But we're at a time where the pipeline of new copper projects to be put in production to meet that demand is at historic lows. We've quite simply found all the easy copper. And I've got some slides that show that later on. That is our resource announced, as I say, 8.56 billion pounds of copper. We will continue to drill that. We'll continue to expand that. There's a lot of numbers there, but I think it's important to understand the grade of a copper deposit relative to, say, the cost of putting that in production. In the case of this estimate, that's manifested here by this reasonable expectation of eventual economic extraction. So that's the grade that the engineers estimate is your break-even cost. In the case of this deposit, in the case of Santo Tomas, that grade is 0.13 copper is the break-even cost. Our average grade is 0.36. So you can see there's going to be very robust margins potentially here at Santo Tomas, up to 65% or so, the rough math says. So it's a very, very low cost deposit. That grade, admittedly, is somewhat low in historic terms. Copper grades have been falling quite dramatically for the last 20 or 30 years as the good deposits make way for what is left. 0.36% is within the range of those deposits which are on deck to be put in production to meet future demand. But in the case of Santo Tomas, we have extremely low costs that are a factor of some things I'll identify. In the last 3 years rather, we've deployed the 60 million raised with a 76 drill hole, 49,000 meter drill program. We've conducted high-tech tests of a type that didn't exist 3 decades ago when this deposit was discovered. Three-dimensional induced polarization, big electric charge in the ground. It's very common technology in oil and gas. Thousands or hundreds of sensors, rather. They read the charge coming back to the sensors, and you get a 3D picture of what's underground. Environmental baseline studies, community engagement, and underway presently is a preliminary economic assessment. So great deal of work, great deal of capital has been put into this project, and we've advanced it to the point of a mineral resource estimate, and within weeks we'll have a snapshot of what it will look like as an operating mine. This is a pretty picture. It also represents a great deal of work. That's 49,000 meters of drilling, 76 holes. We added that to the 75-hole database from historical drilling, and we came up with a mineral resource estimate. That's 3.5 kilometers from, well, it's 5 kilometers in total from end to end. 3.5 kilometers were drilled in detail and led to the mineral resource estimate. The deposit remains open in a number of important directions, not just the northern portion there, but in the south and in the center. So still lots of room to expand Santo Tomas. Some of our final drill holes announced after the mineral resource estimate were some of the best in the program, suggesting that the deposit will indeed expand in size between the mineral resource estimate and the PEA, and ultimately in the future as well. And that is what 8.5 million pounds of a billion pounds of copper pixelated looks like. This is a block model. It takes the total resource and puts it in blocks of, I think in this case, it's 10 by 20 by 50 meters. The interesting thing about Santo Tomas, one of the things that will, I think, ultimately, well, carries the potential for low costs, is that this is a flat-lying ore body. It sits at surface. In many cases, it outcrops on surface. It is not a deep-seated ore body that requires expensive underground mining or a deep pit. In fact, 70% of this deposit sits in a ridge, a north-south running ridge, and exists above the valley bottom on both sides. So 70% of this resource can be extracted before you're building anything that resembles a pit. There's a relatively low waste to ore ratio as a consequence of this positioning, and you have the potential for gravity assist in the mining costs. So very well situated ore body, and we expect the PEA to reflect some of those low costs. That is a list of those people that are working with us to generate first the mineral resource estimate, and then ultimately the PEA, and beyond the PEA to higher level studies after that. Richard Locke is largely responsible for choosing these consultants, and mining industry people would recognize Ausenco, SRK, ALS, and who else is on there? Mining Plus. And Whittle, we're currently not using Whittle, but a very interesting technology, interesting computer algorithm that takes that block model and the infinite combination and permutation of the order in which you mine it, and optimizes it, giving you higher revenue, lower cost, higher NPV, that sort of thing. So ultimately, after we create the initial mine plan, we will go back to Whittle and put the numbers through their magic box and come up with an optimized plan. Again, that's pretty standard in the industry. Relatively new, but standard. The timeline from January 2020, when we resolved the initial land assembly problem, the legal title dispute that was at its core. We commenced drilling. We built a world-class core storage and analysis facility near the project. We hired a great many local geologists. At one point, we had up to 100 people, mostly Mexicans working for us, mostly young, dynamic Mexicans working for us. We had 7 drills turning. We knocked off 49,000 meters and 76 holes relatively rapidly. Going forward, from the PEA, as you can see, expected at the end of this month, we would bring back a certain number of those crew. We would bring drills back. We would advance the project in a number of important ways. Continued drilling, continued optimization, a new mineral resource estimate, perhaps a new PEA, or we would go to the next stage, which is a pre-feasibility study. Higher level study, greater degree of certainty, and typically a bump in the value of an asset or the value of a company. Our location within Mexico, you can see we're just straddling the border of the states of Sinaloa and Chihuahua in northwest Mexico. The port of Topolobampo is 160 kilometers to the southwest of us. The port of Guaymas is about an equal distance to the northwest of us. We have, as I said previously, a lot of infrastructure in place to help build a project of the scale that a mine at Santo Tomas would be. These assets, these porphyry copper deposits, are the tier 1 assets of the mining industry. They're the biggest assets of the biggest companies. They carry them over multiple commodity price cycles. They generate the bulk of the revenue, the bulk of the profit. They produce vast amounts of copper typically at low prices. So the need for the kind of infrastructure, these aren't mines that operate half a dozen trucks driving back and forth and ship off a load of gold every month. These are projects that will ultimately, these types of projects deliver hundreds of thousands of tons of copper concentrate to ports annually. In the case of Santo Tomas, the previous study scoped it for the production of about, let's say, 350 million pounds of copper in concentrate per year. That's about 500,000 tons being shipped to a port every year. So big projects, big infrastructure, and big revenue, which Mexico is no stranger to. Mexico is the world's largest producer of silver. It's number 5 lead, molybdenum, number 6 zinc, top 10 gold and copper. It is one of the world's de facto giants. Top 5, called the Enduring 5 by a big mining consultancy. Canada, Australia, United States, Mexico, among the top 5. So it is a big mining company or country. It's got very supportive population. It's got very supportive legislation. It's a country that sees itself as one of the world's big miners. We have experienced that firsthand over the last 2 decades that we've been in the country, and very much appreciate doing business there. So here is a more focused look at where we are. I think I've covered all these points before, and I will get then to, because I see my time is running out here, working with the locals, very, very important. We've built computer labs in the country or in the region. Every school-age child in the region has access to computers, a lab, and education as a consequence of investments that we've made. And copper, the copper dynamic. The supply chain to beat climate change is already being built. There's a mind-bending amount of solar in the U.S. pipeline. The U.S. has legislated in a multi-$100 billion effort the acceleration of renewable energy. The internal combustion engine in the United Kingdom will not be allowed. New gas-powered cars can't be bought after 2035 in the UK. You have gone from 7% of your energy from renewables a decade or 12 years ago to about 40% today. You've invested $120 billion in very copper-intensive technologies, and that is only going to accelerate. So the shift to clean energy, the clean energy future is arriving faster than you think, as published by the New York Times a couple of weeks ago. So this is a big trend. It will impact all of us. It will benefit those of us in the industry. And it was a theory when we started with this project. The theory has turned into reality, and the reality is picking up pace. At a time when the discovery of new copper resources is hitting dramatic lows. The available number of projects in the pipeline to be put in production has hit historic lows. So it's a very interesting could be a word for it, convergence of trends. There's going to be higher copper prices. There's going to be more capital go into new copper mines, yet there's very few of us around. The world has a few hundred producing copper assets. The number of new copper mines independently owned by companies like ourselves with a clear line of sight to development and a large enough potential production of copper can be measured with two hands. So very, very few of us in a world that needs dozens upon dozens of new copper mines. Relatively low compound annual rate of growth of copper consumption is going to accelerate a little bit, but even that small acceleration on top of a $250 billion annual turnover results in very, very large numbers of copper, amounts of copper being traded per year. Combine that with aging mines and in decline, limited new sources of production, and you have deficits, which of course provides price support for copper, and it provides incentive for the large copper mining companies to acquire new assets. Goldman Sachs summed it up nicely. Copper is the new oil. Copper is the commodity that will drive the economy over the next century the way oil and gas have for the last century. Sticky supply threatens to deplete copper stocks, and copper on a necessary path to a price of about 80% higher than it is today, and fairly rapidly by 2025. This may or may not happen, but it gives companies like us and it gives investors confidence that there will be a floor for copper prices and there's incentive for them to go significantly higher. Cantor Fitzgerald initiated coverage on Oroco just a couple of months ago. Very thorough, large report. We'll make sure to distribute it to all of you by email after the presentation. Our current share price, 70 cents. Cantor has a price target of $1.50 based on the publication of a PEA, and they have further price targets of $2 and $4 based on advancing the engineering studies. Not based on the discovery of anything that we haven't already delineated, but simply based on advancing the project by engineering. And again, there's just the major points that I made up front. So thank you for your time. I appreciate it and look forward to questions.
Thank you, Adam. Thank you very much. Okay, anybody got any questions for Adam in the room at all, please? Thank you. Gentleman here, please. Thank you.
Thank you for your presentation. I've got some copper mining shares. I'm very enthusiastic about what you say, but it doesn't look to be reflected in the copper price.
Yes. Oh, absolutely. One of the great frustrations in the commodity business is its cyclicality. And one of the great frustrations in the copper market right now is we see these trends. We see these headlines coming out on an almost daily basis. Yet we do not see the price of copper moving in a way that's reflecting this. So these headlines, in a way, are almost mocking the thesis at this point. But copper is a very widely traded commodity. It responds to price pressures on a given day or given week or given month. It does not respond to where we think we know copper is going to be 5 years from now, or 8 years, or 10 years from now. It responds to a spot market. Right now we have fear of recession. The market is fairly in balance between supply and demand. We have recessionary fears. We have fears of China slowing down. We have a very high US dollar. And so that leads to the current copper price. It's not $5. We'd be ecstatic if it was $5 today. It's $3.75 a pound, but that reflects today's conditions. What we see coming, though, would suggest that those conditions are going to change.
Okay,
So
thank you.
the supply and demand balance on a given day is what sets the price. But you know, reading the tea leaves, it's fairly obvious where that's going.
Thanks, Adam. I think we've got a question over there, gentlemen.
Hi, thank you for a very interesting presentation. 3 quick-fire questions. You said you'd raised $60 million, but you have more engineering work to undertake.
Yes.
How much do you think that could be ballpark? Because you said that the shares could go up to $4, but
Yep.
are we going to spend $10 in the engineering?
Yes.
Secondly, how long is the license for from Mexico?
Yep.
And finally, the third question was, it's a Canadian company, so as a UK investor, how would I access the shares?
If you can be brief, please.
Okay.
Thanks.
So to take the project from where it is today to a pre-feasibility study, we estimate somewhere in the range of 20 million Canadian dollars versus our market cap today of 150 million. So the dilution is fairly easy to calculate going forward. You can acquire the shares. I'm not sure of the technicality of acquiring shares, but you can acquire them either on the TSX exchange through your broker, or they're listed also
You can acquire them on the platform, AJ Bell.
on the US OTC, and AJ Bell has. And I'm sorry, what was the middle question?
The last one was, how long is the license for?
A license. So there's several concessions that make up the total land package. Currently they last until between 2046 and 2064, with 25-year additional renewals allowed. So in reality, they last as long as they'll need to last.
Thanks very much, Adam. If you want to speak to Adam a bit more, please join him afterwards for drinks.
Thanks, Kristen, as well. Ian Rice, Mr. Ian Rice is here with me. He is our London-based director, so please seek him
Good
out
evening,
and
Ian.
ask him as well.